When we take a look at three basic topics, revenue recognition, lease accounting, and financial instruments, we're seeing probably the biggest changes in U.S. GAAP in the history of U.S. GAAP based on those three standards. So when you combine those three standards with all of the other standards that have been coming out during the last 4, 5, 6 years, what we're seeing is a major effort by companies, by their auditors, by user groups to try to comprehend what changes are being made and what impact those changes are going to have on the financial statements and note disclosures that are a consequence of all these new standards. If you take a look at a financial statement that maybe was issued in 2010, and we take a financial statement that's going to be issued in 2017, there are significant and dramatic differences in not only the presentation of the information in the statements, but the quantity and the quality of the note disclosures. And this is a constant learning process that folks have to go through now, whereas in the past, FASB might have issued 1 or 2 or 3 statements a year. Now we're looking at 18 and 20 statements a year, and it's a significant burden and a significant challenge for anybody who's involved in the financial reporting process. One other issue we should talk about is the impact of these new standards on user groups. When you take a look at whether it's an investor, whether it's a loan officer, whether it may be a government agency, whether it could be anybody who's using the financial information, they too have a learning process to go through because they're going to be looking at performance measures that will be impacted pretty significantly by many of these new standards. So if you're used to a certain trend analysis, a certain trend circumstance, all of a sudden that trend might not be the same as it has been. In some cases, it may actually be reversed from what it has been because of the changes that have taken place through the issuance of these various accounting standards. We look specifically at the lease standard, which is going to force companies to place billions, if not trillions of dollars of assets and liabilities on their balance sheet upon its effective date in 2019. And when that happens, not only are we going to see total assets increased, total liabilities increased, but when you start looking at your traditional performance measurements, debt to some relationship or return on assets or whatever that might be, all of those relationships are going to be significantly changed as compared to what you're currently looking at today.